The one word that I think about when I think about the market this week, Michael, is relentless. It's just been relentlessly bad all the way around. The technical indicators are broken down, the internal mechanisms and indicators that we look at. There's rarely a bid that comes in, a sizable bid and a substantial bid, and we've seen that almost every day. We start selling off at about 2 o'clock and we take a sharp decline down. Now, to me, that speaks that a lot of the quant machines and other algos are looking for some sort of signal, and we've gotten it every day. Today it was Paul Ryan coming out and said that the president's not going to sign that bill. So the institutional investors and the other broker-dealers that we speak to, I hear the same thing from them. Number one is they're confused. They're experiencing a little cognitive dissonance, right? We hear that the economy's great. Why is the market not rallying? And the other thing that we hear quite often is trader speak is that no one's willing to catch a falling knife. Yeah. And they're not going to step in that. And you see that somewhat in the volumes, and we're not getting a bid. So I think we're going to play this through over the next couple of weeks. There's no money in here to put a bid in this market.
White House economist Kevin Hassett, just on, told us that the market turmoil is about misinterpreting the yield curve, which has been distorted by QE, about global economic weakness, because there's no reason to think that the U.S. is slowing. He said no change in his outlook for 2019. Is he right? Is that why the market's throwing a fit?
Well, he looks at the same data that we all do, and yes, he's trying to represent that this is transitory and the market will bounce back. The only problem he has is that the market participants don't agree with him. And you saw that quite clearly yesterday when Jay Powell came out and said everything's great. But the market was expecting Jay Powell to say, we're done for the moment, and the next 8 meetings in 2019, we'll take it as the data presents itself. He did not deliver that message, and that's why we sold off hard. So, sorry, you're right. The White House officials clearly want to have the plunge protection team in there working, and anybody can Google that and find out what that is.
Trying to talk up the market.
Talk up the market, yeah, exactly. The so-called Bernanke put, as we used to call it. And the market participants, at least at this late stage in the year, the lack of liquidity, they're just not buying it.
Rick, if you're an asset allocator, long-term investor, an individual, you get stocks down in the U.S., as I said, 16% in 3 months. Bond yields are lower. Is that a call to action for you?
No, it's not. We have to recognize that this kind of thing happens periodically in the markets, and it's just the way the markets behave. So I'm not diminishing it at all. I think when you're going 80 miles an hour for a long time and you slow to 55, it feels really slow. But there's still growth going on. You're still moving ahead. And that's what's going on in the economy. So yes, real estate is slowing and auto sales are slowing, but it's still favorable. All the numbers are still looking good. The economy is still robust. We're still seeing GDP growth projections going forward. So over the next 10 years, which is what an ordinary consumer is thinking about with their retirement, this will be a long, distant memory before it ever really matters to anybody.
You have a good feel for the retail investor and your clients. What's the level of fear out there, given what we've seen?
Virtually non-existent. We polled our advisors this week. We have 330 advisors across the country with 85,000 clients, and we polled them saying, hey, how many calls are you getting? It's about 1% of our clients. So virtually none of our clients, 1 out of 100, are expressing any concern or worry about this. And it's usually the clients who are nearest to retirement, which makes sense. So if you have a proper asset allocation in your portfolio, a proper long-term time horizon, you can ignore all of this because it's not going to matter to your long-term plan.
Now, if you're going to maintain that same asset allocation, though, wouldn't you be topping up your stock allocation right now?
Absolutely. This is a buying opportunity in that regard. The opportunity to rebalance your portfolio, taking advantage of the weakness that exists. If you loved your portfolio a year ago, you got to be even more in love with it now because prices are even lower. So yes, take advantage to treat this as the buying opportunity it is.
Rick Santelli, we haven't forgotten about you. Give us your take on all the market action we've been seeing and whether the outlook really has changed significantly for 2019 in light of the Fed and the shutdown and everything else getting thrown in.
Well, I think on the shutdown, Art Cashin nailed it. It's the infighting, it's the politicalization. It isn't necessarily the event. And we're going to have a lot of fighting going on over the next quarter or two. So the market's going to have to grapple with that.